Hey everyone, great news. Interest rates have come down and they're likely to come down some more. So this opens up some great opportunities. And you know me, I'm always looking at properties. I'm kind of a serial investor. Love to help first-time buyers, first-time investors, everything in the middle. I'm all about seeing people win and building generational wealth. And this is an awesome property that I found. Just kind of cruising the internet. I thought I'd show you as an example of what rates are right now and how we'd underwrite this as a short-term rental. So here's where we're at. Now keep in mind, if you're buying a primary residence, obviously you're going to have better options, lower down payments, better interest rates. But as an investment property that you're going to use as a short-term rental, there's very niche lenders that do that. They'll use projected income, and we can even use things like AirDNA, STR Insights data to qualify. And this is a loan that's like that. We don't use any personal income at all. So I just wanted to show you that option. Keep in mind, there's always a dozen ways to do a loan. This is what's structured for that type of a transaction. So if you're looking at that kind of a loan, you might be looking at a 5-year fixed at a 6.3 rate. And there are fixed rates available, but this is going to give you the lowest rate while you have the property and you're trying to get up and running. Looks like this property would do 3,400 would be about 3,400 a month. And I mean, look at this thing. It looks awesome. It's got a pool. And I don't think it's been marketed very well because, I mean, look, there's all the way back here on this page. And, you know, so that just tells me that there might be some opportunity to pick this thing up at a good deal and that this would be an awesome short-term rental. Now, what do the numbers really look like? You know, if we plug in AirDNA, it tells me that as is, it should do about $100,000 a year. So that's pretty good. But, you know, sometimes you can find one, and I don't know, I haven't looked at this one that close, but maybe you can make another bedroom into 2 bedrooms or 3 bedrooms or finish a basement. Look at what happens when you push the guest count up to 14. This thing goes off the chart. Like, holy crap, there's people doing $260,000 a year in those kind of properties. So this could be a real winner. Now, at the end of the day, how would we underwrite that loan? So I told you this is a 5-year ARM at 6.3%, and you're going to pay 1% to get that rate. But you can change that number. If I change this number changes. So maybe you don't want to pay any points. Well, guess what? You could do a no points at 6.6%. That's going to save you $3,900. Now, if you do the math, about 3 to 5 years, you'll actually be ahead because it's going to raise your payment $65, but you're going to save $3,900 in fees. So that's one way to think about it. Now, this loan does come with a 3-year prepayment penalty. That means that you can't refinance or sell. These aren't Fannie Mae loans like you get on your home or second home. This is a loan you're getting from a hedge fund. And because they're hedge funds, they have prepayment penalties because they have to guarantee their investors a rate of return. So if you don't like that, you can buy it down, you can buy it out. But guess what? Things get more expensive. To go to a 2-year prepay, you're going to see the rate jump up to possibly 7%. And if you just don't like the adjustable rate, you're going to be looking at somewhere around 6.8%. All those add to the monthly payment. But, you know, those are all options you have. You even have options where you could qualify as low as 5.99 by paying a whole bunch of points, or maybe on a long-term rental, we have better rates. You know, it depends on the deal. You can even buy down the rate, do interest only. You can even buy out the prepayment penalty if you want to. But then you kind of have to ask yourself, what's realistic here? If this is an investment property, it's going to take a while for rates to come down. I mean, the Fed doesn't lower rates overnight. They lower them a quarter every few months. And so, I mean, it's going to be a whole year and a half later before rates are low enough. So maybe a prepayment penalty isn't a bad idea. I wouldn't get too fixated on it. What you really want to focus on is the best cash flow. So let's talk about that cash flow. Even when the AirDNA was only $100,000, maybe that's the best it's going to do. That's okay. I mean, this thing, we'll use 90% of that. Can you believe that? We have lenders that will use 90% of the gross income, and then we take that. That doesn't mean that's really the income, but we have programs that'll do that. And then all we do is take that number, which is 1774 or 7747, sorry, and we divide that by the total monthly payment, and we come up with what's called a DSCR ratio. That means that the income is less or is more than the payment. As long as this is 1.0, you're going to have options to qualify. And the higher it is, the better it is, and the more profit it is. That's the whole point of it. Now, is this really the best way to underwrite these? No. This is just how lenders approve them. So that's it. I don't need W-2s, pay stubs. That you're done. You qualify. Now, you do need 20% down for this kind of a deal, but we do have options with as little as 15% down. But look at that. The interest rate can go up as much as 1.5%. So it's really better if you're going to do real estate investing to put as much down as you can, because you want the best cash flow, and that's how you get these low rates. So I know that's a lot of information to digest, and whether or not this thing would really be a good short-term rental is hard to say. But at the end of the day, there's people out there that we work with that can definitely help. If you'd like to consult with somebody, I know people. I have a lot of experience myself, but I'm just the lone guy. I can definitely point you in the right direction. I'd love to help you out any way I can. The next step would be, for sure, schedule a quick Zoom meeting with me. You can do that by using the link below my signature. It takes you right into my calendar. It's going to allow you to schedule some time with me. Then I can share your deal. We can look at whether or not it's a good idea, and maybe give you some direction and definitely get you a pre-approval. Looking forward to talking to you soon, and I wish you the best of luck on your journey.